Hi everyone, if you are purchasing an electric vehicle, this video may be beneficial for you. The IRS is providing a $7,500 tax credit for qualified electric vehicle. In order for this vehicle to be eligible for the $7,500, the vehicle needed to be assembled in North America, and the battery, the necessary elements and minerals that is needed to prepare the battery for that vehicle, 40% of that needed to be extracted from the United States or any countries where the United States has a free trade clause. Now, you don't have to worry about any of that. Whatever car that you are purchasing, your dealer will be able to let you know if your car qualifies for the credit. Now, the breakdown is if it meets the critical minerals requirement, it's $33,750, and if it also meets the assembly requirement, that's another $3,750. So together is $7,500. So this is the maximum credit that is eligible for a vehicle. Now, in order for the vehicle to be eligible as well, the price needs to be below the price cannot exceed $55,000 for sedans. And if it's an SUV or sports utility vehicle, the price cannot exceed $80,000. Now remember, the $55,000 and the $80,000 pricing is before sales tax and registrations and everything. So in other words, as soon as you go pick your vehicle, as long as the MSRP does not exceed 55 or 80, depending on the type of vehicle you're getting, you should be eligible for this credit. Now, once you do purchase the credit, there is going to be limitation on how you'll be able to get the credit or how much you'll be able to get on your tax return. Now, number one, this credit is a non-refundable credit, which basically means that if your tax is zero, you will not be able to get this credit. Now, if your tax is, let's say, $3,000, then out of the $7,500, they will give you $3,000 as the credit. So in order to get the full $7,500, you need to make sure that you have enough taxes to recoup. Now, that means, in other words, if your income is too low, you may not be eligible. On the other end, if your income is too high, you may also not be eligible for the credit. For example, if your modified adjusted gross income for married filing jointly exceeds $300,000, you will not be eligible for the credit. If you're single, it's half that, which is $150,000. And if you're filing as a head of household, your limitation is $225,000 in adjusted gross income. So this is very important information. Make sure you take all of this into consideration when you're purchasing the vehicle. Also, keep in mind, starting this year as well, if you're purchasing a used electric vehicle, you're also eligible for a $4,000 credit. Now, everything becomes half of the new vehicle. That means that the vehicle that you are purchasing needs to be, it cannot exceed $25,000. Then on the limitation on income, if you're filing married, you need to be below $150,000. If you're filing single, it needs to be below $75,000 adjusted gross income. Now, since there is a limitation, I want you guys also to be aware of something that is going to begin on January 1st, 2024. The IRS is contemplating on giving the credit while you're purchasing the car with the dealer instead of taking it through the tax return. So right now, if you go purchase the car, the dealer is going to provide you with some documents. Then afterwards, you'll go and file your tax return, and on the tax return, you'll claim the $7,500 credit. Now, if the IRS decides to give you the credit upfront while you're purchasing, in that case, you wouldn't have to worry about all these limitations that I just mentioned with the modified adjusted gross income, non-refundable, and all of that. This is a proposed rule that is going to go into effect in January 1st, 2024. So my suggestion is that if you think you do not qualify for the credit, think about postponing it until next year. If you don't have these limitations, go ahead and purchase this vehicle, assuming it meets your lifestyle. All right, if you guys have any questions, feel free to contact us. We'll be happy to answer any questions you have. Thank you.